Uh, Good morning, everybody, and welcome to today's Investors Expo Trading Summit with four great speakers, including myself. I'm always interested in doing these because it's in trading. What I'm going to talk about later today. Trading is a journey; it's not a destination. As traders, we always want to be improving ourselves, and what I'll be talking about specifically is strategic order flow, which in my mind is the pathway to trading success. Before I begin, just go through a little quick disclaimer. Trading does involve risk. Risk capital is money that should only be used for trading, which you can afford to lose. Don't basically go out there try to think that you're going to, all of a sudden become a millionaire. The meme that I like to describe is, um, people buy crypto, all of a sudden, next thing they're expecting when they're going to get, their Lamborghini, and that's just not how it works in the world. So what you're going to discover today is actually a couple of things. One, you're going to achieve market understanding through order flow, and two, I'm going to try and get you on the path to trading success. Trading is a difficult journey for a lot of people. A lot of people are always want to become traders, and they think that they open an account, they put money in it, they spend some money on a trading platform, that all of a sudden they're going to be making money. It doesn't work that way. It takes some effort on your part. It's going to take some learning on your part. And really what I want to happen today is for you to have sort of that light bulb moment where you're going to see, oh yeah, I could, by understanding what's happening in the market, I could become a better trader. And I'm going to show you how to see market activity that's invisible to most traders. Okay, so it's a combination. People say, is there a holy grail in trading? Well, there's not necessarily a holy grail in trading, but it's about understanding what's happening in the market and be able to discern things that other people just don't understand why it's happening. Okay, and that's really how you're going to become the best trader that you could. So this is for you if you are, basically if you're frustrated with the markets, where it feels like you can't do anything right? And, it's like every time you get into a trade, it just seems to go against you. I mean, people like to joke around. Sometimes I joke around about it. Sometimes, like, every time I try to dip my toe into Bitcoin, I'll buy Bitcoin, then next thing I know, it drops because, I don't really understand that market. I'm just sort of buying it on the hype. But when it comes to trading the actual markets, the futures markets, the E-mini S&Ps, crude oil, the bonds, euro currency, I know what I'm doing, and I've done it for a very long time. So, this training is really for someone that wants to be successful, but to be successful, you have to keep learning. Now, imagine if you could wave a magic wand around, right? You would take better trades. You could understand market structure. You can know which market activity matters. There's so much activity that happens in the market that a lot of it, everyone, you hear the term noise, right? There's a lot of noise in the market. Okay, what if you were able to understand to sort of take away that part that's the noise and focus and concentrate on the part that really matters, right? And that's where order flow is going to help you as a trader. Now, for those of you that are new to one of my presentations, again, my name is Michael Valtos, and why you should listen to me is because basically I've got a lot of experience, right? They say if you want to learn from somebody, you should learn from somebody that's done it, right? Walk along with them, have them show you what works, what doesn't work. Well, I've got over 25 years as an institutional futures trader, experience trading at JP Morgan. I spent 8 years at JP Morgan. I spent 3 years at Commerzbank. I spent 4 years at Cargill. I spent 3 years at Dean Witter, and I spent some time at EDF Man. And this job that I did was as a trader, right? I sat on the trading desk banging out trades all day long, watching the dome, the depth of market. There wasn't footprint charts when I started. I started on the CME floor, and basically the only really type of order flow that we had was watching the orders come into the pit, listening to the volume of the trading pit. Was it getting louder? Was it getting softer, as the market was making a high? And, eventually I left the trading floor when electronic trading started up, and, I never looked back. I took to the electronic trading environment like a fish to water. Now, in 2013, I left my nice job at JP Morgan, and, I just needed some time away from the market, time to recharge. Then, I started writing a book called Trading Order Flow, okay, there was no books on trading order flow at all out there. And, I sat down, I started writing this book, and at the same time, of course, I'm trading for myself, but I realized the software that was out there was very basic, right? So that's why I developed my own software to make reading the order flow easier. Because, at the end of the day, order flow is not a trading system, okay? What it does is it organizes the data so that you, the trader, can make better trades. You could understand where there's market strength, where there's market weakness, where buying's being facilitated, or, trading is being facilitated, where there's weak highs or weak lows, or, if there's a strong high or strong low, meaning the market's going to keep going higher. There's just so much to order flow that, I thought, hey, you know what, it'd be nice if I had some software that could actually help me see this a lot easier rather than me sort of trying to discern it. I sat down and I coded up, a lot of rules that would translate into the software, because, trading with software, it's binary, right? It's zeros and ones. So, you have to be very specific on it. And, that was eye-opening for me. But since then, I've worked with hundreds of retail traders to improve their trading. In the past, when I worked at, places like JP Morgan, everyone was, a superstar. We used to call the term that was used back there was, high flyers, because, everyone was very good. You didn't, have to sort of go through a training program or anything like that. Everyone was already successful in their own rights. And then when I started working with retail traders, I understood where people were suffering in their trading, whether it was from making bad decisions, or, the psychology of trading, or, simply reading the market incorrectly. So, that's why I like to do these presentations, is just sort of get it out there so people can understand what's happening in the market. Now, like I said, I created software, right? It's called the Orderflows Trader software. And this is what people have been saying about it. Michael, your Orderflows trading software is remarkably helpful, because I can clearly see now what's really happening in the market. Like, for example, who's in control of the market on a very specific time and who is getting weaker as well. Okay, so, there's been a lot of great positive feedback in the market. Now, people say, oh, Mike, have you been such a good trader, all those years? Why are you teaching this? Why don't you just trade for yourself? I do, but, in life, it's about giving back, right? What good is the information if you're not willing to share it? I'm a big believer in each one, teach one, pass the information on, because at the end of the day, what good is knowing all this information about trading if I'm hoarding it, right? The way I look at it is, there's enough food for everyone, right? I want everyone to eat. And if you can't get your own food right now, you can eat off my plate. There's this misconception that people have that's like, oh, I know how to trade, but I can't tell you, how I trade, because, you might take away my edge. Well, there's so many different ways of trading the market and being successful in the market, that there's room for everybody up there at the top, right? It's not like one person goes up into, the level of profitability, and that means someone gets knocked down. No, it doesn't work that way. There's plenty of space for everybody up there. And that's why I like to, come on Investors Expo, is to share this information with other traders. Now, what you're going to discover today, get on the path to trading success, right? Which is really, what we all want to do, right? We all want to be successful traders. I want you to achieve market understanding through order flow, and I want you to see market activity that's invisible to most traders, teach you how to see that. Okay, so achieving market understanding through order flow. Now, understanding order flow will make you understand market conditions. Now, once you understand market conditions, that's going to keep you on the right side of the market, and being on the right side of the market will improve your trading results. All right, so this is an order flow footprint chart. Okay, and at first it looks daunting to people. There's a lot of numbers up there. Oh my gosh, I don't know what to do with this. This is too confusing. People just sort of write it off right away. I know, my kids are like this. Sometimes I show them something and it looks confusing. They don't even want to attempt to understand it. And I try to teach them, try to understand it first because it's to make your life easier. And in order flow, right, there's so much information you're going to see on a chart. You're going to see the volume that's traded on the bid, the volume that's traded on the offer. You're going to see the point in a bar that has the most volume. That's called the point of control. You're going to see what the difference is between the aggressive buyers and aggressive sellers in a bar. And that's called the delta. Now, why is that important? Is because, even though there's volume on the bid side, there's volume on the offer side. For a trade to occur, someone has to cross the bid offer line. Someone has to go from working a bid to lifting the offer for a trade to happen, or someone working an offer has to sell into the bid for a trade to happen. And that's not something that a lot of people really understand. For every trade, there's an aggressor. Okay, somebody that actually went and said, you know what, I want to buy this or I want to sell this right now at the market price. Now there's bids and offers always working in the market. That's in the limit order book, which provides liquidity in the market. But that can be manipulated, right? Bids and offers can be entered, can be pulled, and not trade. Whereas when there's actual trading occurs, that's really what you want to focus on. And that's really the core of the order flow. Back in the old days, the old days, 100 years ago, right? When, one of the greatest books on trading, Reminiscence of a Stock Operator, about Jesse Livermore, he was a tape reader, right? We've all seen those old pictures from the 1920s, where the traders are sitting around the stockbroker's office and there's like that vacuum tube with the ticker tape, right? And people would be looking at the trades. Well, they weren't looking at the limit order book in there. They were looking at the actual trades that happened, right? Because that's really what matters. That's the commitment of a trader to the markets, right? Now, so you have delta, you have point of control, right? Delta is the difference between aggressive buyers and aggressive sellers in the market. Point of control is simply the price level in the bar with the most volume. Then you have imbalances, right? Markets trade in a two-way auction. You have a bid, you have an offer. So if there's more that's trading on the offer by a certain ratio versus what traded on the bid, that would be called an imbalance, a buying imbalance. A selling imbalance would be the opposite, when you have more transactions happening on the bid side versus the offer side. Why? Is because it's showing which side is more aggressive. And there's a ratio that most people use, which is 4-to-1. You don't have to use 4-to-1. I know a lot of people that use 3-to-1. You could actually use like 2.5-to-1. I know some people that like to use 10-to-1. It's sort of the industry standard, and a good starting point for most traders is 4-to-1, right? And you can see those are going to be the numbers in a bar that's blue, right? So you can see here 3 against 56, 44 against 178. These are imbalances greater than 4-to-1, buying imbalances. Now selling imbalances are the opposite, right? So you have 2 against 15, 30 against 153. These are selling imbalances. So you have more aggressive selling at this price in the two-way auction versus buying at the other price in the two-way auction. And that's important to know because that's going to help you keep on the right side of the market most of the time. Because really what you want to do is you want to be trading on the side of the flow of money. And if the flow of money that's coming into the market is strong to the sell side, why would you want to be buying? If all the orders that are coming into the market are sell orders, sell. If you're trying to buy, you get into a new position trying to buy, well, you'd be fighting that stream of sell orders, and ultimately you're just going to get stopped out. Now, order flow differs from the normal bar chart, right? This is the normal bar chart, okay, candlestick chart. And a lot of people say, well, the candlestick chart's got so much information. What information? All it's got is the open, the high, the low, the close, right? I mean, it's colorful, which is nice. It's easy on the eyes as opposed to a normal bar chart, but it's just showing you where price was. You don't know where the heavy volume was in a bar, and depending on sometimes where the volume appears, it could be very indicative of what's going to happen next in the market. So imagine if you have at the top of this bar heavy selling, Then down here, you got heavy buying and the market came back up. And then when it comes back up, that heavy selling that was here earlier is no longer there. You know that it's a green light to just go higher. That's where order flow is going to help you, right? It's going to help you understand the market conditions. Now, traders are accustomed to just using indicators. There's nothing wrong with indicators. I create indicators, but the indicators I create are based off of market internals, what's actually being traded in the market as opposed to the price. And what I mean by what's actually trading, I mean the volume that's traded on the bid, the volume that's traded on the offer, whether there's buying imbalances, selling imbalances, where the buying occurred in a bar, where the buying or selling occurred in context of the market structure. Now, if you're just looking at a normal bar chart, you're not getting any of that information, right? You're just seeing where the open, high, the low, the close was in the bar, and whether the bar opened and closed higher, or whether the bar opened and closed lower. And what traders like to do is they like to try and simplify things. Okay, that's why they create indicators. And the problem with price-based indicators is, one, you're treating all prices the same, and not all prices that trade should be treated the same, because at some prices you could have heavier volume, some prices you could have very, very light volume, and other prices is probably just going to be your normal volume. A lot of people say, I got chopped up today in the markets, or the markets, there's a lot of noise in the markets. Well, when you're just using an indicator based on simple price analysis, basically you're making an indicator based on noise. If you're saying, most of what happens in the market is noise, and you're just putting an indicator on noise. But if you're putting an indicator based on what's actually being traded in terms of volume, in terms of the two-way auction, in terms of balance, in terms of imbalance, in terms of aggressive buying or aggressive selling, of passive buying, of passive selling, you're really going to understand the market conditions a lot more. Because remember, you should be trading market conditions, not price, right? People say, well, no, price is the most important thing because, that's what gets people to buy or to sell. Well, price is really, something that people are going to make their decision on. But what you should be doing is, is the market moving higher or moving lower? Now, it's one thing to look at price. So yeah, price goes, price ticks higher, market's going higher, just buy it. Market ticks down, just sell it. Well, it doesn't go that direction forever. You can see that there's times where the market just sort of goes sideways, goes up, then just goes sideways, goes up, and then finally sells off. As a trader, what you want to know is, all this stuff here, it's probably noise. All this stuff here is probably noise. But if you get to a point where it's like, okay, maybe all this buying is done. And once the buying is done and you're up at the high of the day, this is yesterday, the market is ripe for a sell-off, right? I mean, we hit a high earlier here. Market just went sideways, made a new high, market went sideways. You made a new high, but then the market sold off. And as a trader, you want to be looking for those clues as to why the market is selling off, and position yourself to be short in this case, right? Because you're watching the market condition, you're not necessarily watching price. Because you just made a new high, okay, I should be buying. Just made a new high, okay, great, I should be buying. You made a new high, yeah, sure, I'll buy some more. But if you were to buy up here, next thing you know, the market dropped 10 points, almost 20 points within 5-10 minutes, right? You're going to get loss after loss after loss if you think that way. I mean, you might have some small wins, but your losses are going to be very, very big. Now, again, being on the right side of the market is about being long when the market goes up, short when the market goes down, and more importantly, out of the market when the market isn't doing much of anything. Really, what you want to do is you want to be able to understand, right? People say, oh, you got to be in sync with the market. Yeah, you do. But there's a lot of times where the market isn't doing much of anything. It's just basically rotating around, going sideways. Okay, fine. Just leave it at that, right? Let the market facilitate trade. That's what the markets do. But if there's a clear sign that the market is getting ready to sell off, that's when you get short, right? If the market is going higher, that's when you want to be long. But not just because, oh, we made a new high, now I'm going to try and buy a breakout, because, the market can go higher, but to where, right? We don't know where it's going to go higher if you're just indiscriminately buying breakouts. But if you're at the high of the day and everything all of a sudden turns bearish, what you're seeing in here, all right, you can see you got selling imbalances. You've got negative delta in here getting stronger, minus 300, minus 600, minus 685. That's a sign that's telling you, what, this market is ripe for a sell-off, right? You're getting lower point of control, lower point of control, lower point of control. You have volume migrating lower, right? Which is telling you that as volume migrates lower, value is most likely migrating lower, because the fair price, which is what value is, the fair price of each bar is going down, right? That's a bearish sign. Imagine what it is basically like, if you've ever run a business and you're selling pens or whatever, and the average price of a pen is $2, and you're doing good business, then all of a sudden business starts getting slow. You got to start lowering your price, right? And that's really, if I were to rename the point of control something else, I'd just call it the price tag, right? Oh, I know the price tag of the market at this time is 46.96. Now I know in this time it's 46.92. Now it's 46.91 and a half. So I know prices going down, right? I know that there's supply in the market, that people are happy to try and lower their price to sell it, right? Just as if the market was going up, people, you're going to see point of controls generally go higher, 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 until it stops and it starts coming down. So that's, be on the right side of the market. Okay, so that's all well and good, but how can I tell that in the order flow? Well, you want to see market activity that's invisible to other traders, right? Because basically, if basically order flow is information, okay? And information is valuable to a trader, right? We all, the big, we hear the government numbers that come out every day almost, CPI, PPI, GDP, the employment numbers. That's information, right? And information is so valuable, people go to jail over it, right? But that's called insider information. Order flow is not insider information. Order flow basically allows you to see what's happening in the market, right? The actual trading that's going on in the market. This information that's currently available to you. If you have a real-time data feed, from your broker, whether it's like CQG Continuum is the most common one, this information is available for you. You just have to have a tool that is going to help you analyze it. So, for example, this is the E-minis. Okay, if you're just sitting here watching the market just sort of came down, just sort of going sideways, then it rallied, right? It rallied about 15 points in about 10 minutes, right? Those are the moves that as a trader you want to take. But the problem is, oftentimes by the time people realize that this market is going up, they've already missed half the move. But if you're watching the order flow, you can sort of see what's happening, right? And this box here, where the market is just going sideways on, that's just sideways activity, right? That's the noise that everyone talks about. And it's not until you have this bar here that's very actionable, right? We sort of come down, test the lows, rally up, come up and close on the highs. All right, people say, well, yeah, that's so obvious. Well, and then by the time they realize it, they're getting long up here, and they just got such a small trade. But if you're watching this bar form, you're already getting signs in here that the buying is getting stronger, right? Not only that, but if you sort of walk it back a little bit, you can see here, right, you had some very strong selling come down here, minus 1,035. Then you go inside, minus 122, still inside of this bar here, plus 238. And then minus 369, minus 94, plus 37, plus 86, then boom, plus 530. So you're sort of just hanging inside of this big, strong selling bar, right? Minus 1,000 in the delta, just going inside, inside, inside. But delta is, the selling is gone, right? This was it. This is the big push down. This is it. We're going lower. Everyone's coming in and selling it. Everyone came in, had negative delta of 1,000. But then no follow through in 1, 2, 3, 4, 5, 6 bars. And not only that, the only big negative delta, minus 369, couldn't even move the market lower, right? So then The delta is getting small in here. It's just, small deltas minus 94 plus 37 plus 86, then boom, plus 530. But what else do you have, right? So you got delta getting stronger, positive. So, aggressive buyers are here. You have, 3 positive deltas. But you've got selling imbalances in here. This is a green candle, right? You got 1, 2, 3 selling imbalances. Then you got buying imbalances after you're closing, you're going up. So it's telling you that you have aggressive selling in here, but it's being absorbed by passive buyers, right? People are happy to just sit here and bid the market, right? Yeah, sure. We just sold off, but now you're seeing signs of strong bidding happening in the market. Actually, there were signs here earlier in this bar here at 917. It had negative delta of 369, but it was a green bar. So what it's telling you is you got negative delta on this green candle is because you have strong passive buying in here. You've got the 264, you got the 492. Now, these are not imbalances in the two-way auction, but this is what's causing that negative delta. When you have negative delta in a bar that turns green, generally that's a sign of absorption, because what is happening is you have aggressive sellers selling into the bid, but you have a strong buyer there absorbing all that selling. So this was the first sign. And then you're seeing the little signs of life coming in here with the positive deltas, 37.86. But then this bar is more obvious. You do have the imbalances, the 66 against 379, the 33 against 167. Right, then the market shot back up, and by the time it got towards the upper end of this bar, people that were selling down here now become the buyers up here, right? Buying it because they realize, we're not going lower, we're going higher. So that tells you now is the time to be getting in. So you'd be getting in around 32, and the market just shot up to 42 within 1, 2, 3, 4, 5, 6 minutes. That's a six bars right there. So that's how order flow is going to get you into a trade as soon as possible. You got a moving average. It sort of comes down here, slopes down, and it's coming in here maybe around the 36. People say, well, we just broke the moving average to the upside. They get long at 36. They ride it up to 42, thinking it's going to go up, and it just comes right back down, and then they get stopped out. Now, seeing what other traders can't see. Now, here's a market. This is E-minis. Again, market's rallying up. Quite strong rally. All right, that's what you like to see. Point of control is mostly going higher, but as you're going up, you get up to this point where you got strong delta, 486, 346, but then 64. You'd be wondering, well, we're going up, but what's happening? The aggressive buying is getting weaker. That's not a good sign of a market that's going to go up and up and up, right? If you expect this market to keep going up, you want to see delta being steady or growing in a positive sense, not negative sense, going down 486, 346, and 64. Then you got negative delta, 108, negative 108. It's like, okay, we just made a new high. Now we're looking at basically negative delta, and the preceding bars, the aggressive buying is getting weaker. Well, what's that telling you? It's telling you that, this move is probably over. Right? And then again, you're looking at another 10-point drop in basically 5 minutes. Now you're also seeing selling imbalances here on the way back down, 50 against 0. Nobody traded. No one was interested in working an offer up in here, or rather buying this offer up in here. Instead, everyone is just looking for the exit door. Get me out, sell 50, 87, 65, 101, 192. Even in here, people, get me out, work an offer. I don't care. This is their limit offer right there. Market comes back up, trades back up to that point where there was that first imbalance. And then again, same thing. More selling imbalances. And the market dropped from, 34, right down to 24. Pretty much, not say straight line, but, a nice 45-degree line down. But you could see the signs, what's happening in the delta. Rather than delta getting stronger, it's getting weaker as the market is making its new high, or swing high in this case, right? So imagine you're going up, you're making a swing high, but the buying is getting weaker. What do you think is going to happen? Well, if buying is getting weaker as you're going into a swing high, there's not much buying power left. And once that buying power is removed from the market, what's left is for the market to go back down. So you can see here, right? This is Monday in the E-minis, right? We had this low here, 46.62 and 3/4, just sort of hanging around the low, hitting it, bounced, made a new low by a tick, made another new low by a tick before, boom, it finally started rallying. Okay, here you sort of had a little half-hearted rally, came back down, tested that low, then shot back up. Now, this is a lot of information in here. Okay, so imagine, right? Sort of follow up on what I just said. You're coming into the low, you're seeing the negative deltas, which is what you expect to see coming into lows. Right? You expect to see selling, right? Then over here you get a bit of buying, right? Positive delta 800. That's a good bullish sign. Then here you get positive delta of just 28, then negative delta. It comes back down, tests the low, and then it shoots up. Right? It doesn't look back at all like it did earlier. So what's the difference of what happened in here versus what happened in here? Well, there's a number of things. Okay, so first you had your nice positive delta here. You're within a tick off the low here at 62.5. So it just sort of went sideways, shot up. You got your higher point of controls. You got your green candles. This bar here, you got some negative delta, minus 46, and positive 800, and then just 28. A market's not going to really rally very much on a very small positive delta, especially if it's trying to come up off the low of the day. If it's coming up off the low of the day, think of it like, blowing a balloon, right? You want the balloon to rise. Well, you got to put, strong blows into the balloon, right? Strong, into the balloon. Otherwise, if you just do a small one, it's not going to inflate very much, right? And that's sort of what this 28 is, right? It's kind of a neutral delta in a sense, right? What you want to see, 806, that's good. That's very good. Nothing wrong with that. Here you're seeing 54, then 448, 200. Then you got a little, the inhale part, you got to take another breath, and 60, okay. It's not the strongest, then 400, 100, right? But more importantly, now you're starting to see, imbalances as well, right? You're getting the higher point of controls. These three bars, these three green bars, very similar to these three green bars, right? Higher point of control in these three, 1, 2, 3. You've got some buying imbalances. This one's got 4 buying imbalances. This one's only got 2. This one's got 2. But the delta is stronger, right? It doesn't look like much, but it's a shade stronger. 448 and 222. Sort of this bar was sort of like the push, like, okay, yeah, let's just sort of pile in and let's go get it higher. They couldn't get it higher, and there was nobody else buying at this time that was really willing to take it higher. You have these imbalances, the 315 against 26, the 54 against 10. But what happened is basically someone just came in and said, not on my watch, and started selling these bids here, the 54, the 315, the 286, and pushed it back down. Once that seller was done, then, very similar. The other thing that you have here is what's called a divergence. That's this little green arrow, right? You have positive delta on a new low, which is a bullish sign, right? Anytime you have delta divergence, right? A positive delta at a new or equal low, or negative delta at a new or equal high, that's what's called divergence. But you also have in here something in the order flow called an order flow ratio, which is telling you basically there's some stopping volume coming in down here at the low, right? Which is also bullish. So you didn't have any of that earlier, the divergence. You didn't have, the stopping volume didn't come in until now. And now the delta is a bit more consistent. The point of controls are a bit more, the point of controls are going higher, and you have the imbalances. So there's a little bit more for you to work with buying this low. Buying this in here, okay, you can. I don't think you would have been stopped out, because you wouldn't have been stopped out until the market made a new low. You would have just taken quite a bit of heat before the market went up and started going in your favor. But these 3 bars is very similar to these 3 bars, but these 3 bars has a little bit more to it, right? With the ratio, with the divergence. Now, this is something that I've been teaching since I released my software, is the ratio and divergence trade, which is, great trades, because sometimes the market can go from the low all the way up to new highs, or from the highs down to the lows and continue making new lows. So this is, one of my bread and butter trades, the ratio and divergence. Now, another reason you want to use order flows keep you out of that chop, right? Remember what I said, a lot of traders complain about, the market's so choppy, I can't do anything. That's where order flow is going to help you. If you're seeing a lot of small deltas, basically that's telling you trade is being facilitated. The aggressive buyers and the aggressive sellers are pretty equal. They're happy to facilitate trade at these prices. You're seeing point of controls sort of not really going anywhere, maybe one or two up, one or two down, sideways more or less aligned. You're getting bars with point of controls at the same levels or, within a tick of each other. These are all signs of sideways markets, okay, which is, those are the markets you want to stay out of. Again, something similar. It's about seeing things other traders don't see, and it doesn't have to be as complicated as I just showed you. You could focus on one thing in the order flow. This is crude oil yesterday, right? We had this nice jump from 69.70 all the way up into, above $70. Well, what's the sign? Just as over here, we're trading 69.90, and we sold all the way down to 69.60 before rallying again. Say, Mike, what's the easiest thing to get me started? Well, concentrate on imbalances. Look for the bars that have multiple buying imbalances or multiple selling imbalances, right? Because that's where the money flow is coming into the market, right? That's, what you want to be trading as, following as a trader is where the money is coming into the market. Because if you're looking at this chart right here, right, you can see these three bars here, or this bar here has got 1, 2, 3 buying imbalances, 1, 2, 3 selling imbalances, right? That's going to keep you on the right side of the market, being where the imbalances, positioning yourself with the flow of money is going to help you. Where is this? This is yesterday. Would you be selling here, up here at the top? We just made new highs. This, remember, right? The Fed announcement came out and basically said stocks to the moon. I'm going to keep printing money. So, the market, reacted as you would expect, right? The market's lifting all these heavy offers, 2,000 here, 1,200 here, 1,300 here, 2,000 here. But then it just goes sideways in here. And then all of a sudden now, you're up here at the highs of the day, right? At this time. Again, we did make higher highs later. But at this point, people are realizing, this market's overextended itself, right? And then it came in big selling here, right? Couple ticks off the high, you've got very strong negative delta. Okay, maybe maybe people are taking some profits. You just had that big run up, and then it just sort of goes sideways, and then again we're still up here near the high, and then you're seeing the selling come in over 1, 2, 3 bars. You're seeing multiple selling imbalances, two selling imbalances here, 3 here, 3 here, lower point of controls 1, 2, 3, 4. Okay, maybe this move up is over for now, right? And you get short, somewhere around the 40-ish area, and it trades immediately down over the next couple of bars to 30. So, that's how you're going to be able to see things that other traders, if other traders are just looking at a bar chart, they're not seeing this interaction between buyers and sellers out there, right? They're just seeing, the bar closed up, the bar closed down. Okay, that's it. So, I want you to get on the path to trading success. Well, how do you get on the path is basically never stop learning, right? You'll never know as much as you should know in trading. That's just the way it is, okay? So again, never stop learning. Anytime the market is at a high, you want to be understanding, should I get short here? Is it possible for me to get short here? And by reading the order flow, you can say, you can put 2 and 2 together now. You can say, okay, well, I just made this new high. But just earlier, I made that new high. We popped up. Should I be buying this breakout or not? Well, earlier we're sitting here. You see all negative deltas in here. All negative, right? Then it sort of pops up here. You got some small deltas, 2, 14, but then 2 again. Then big selling comes in this bar, minus 56. Obviously, you got the imbalances. That's not a good sign when you're at the high of the day to see aggressive selling come in, to see negative delta, and you could have got a quick, what is that, 15, 20 ticks over the next couple of minutes, right? Just as if your market is going sideways, you want to be looking for something that's actionable, something that I could wrap my head around and take this trade, right? Market is sort of coming down in, and then it just takes off. right? Well, what's the signs? Okay, so you're coming down in here, you got negative deltas. Okay, market's selling off. I got some selling imbalances. Then you just sort of got these 3 bars in here, positive delta, positive delta, positive delta. But all of a sudden you see 1, 2, 3 buying imbalances. Okay, you're not seeing selling imbalances anymore. You're seeing the aggressive buying come in. That's your cue. Get long. Right? Remember, trade smarter, not harder. Right? Make your life easier. Use the power of computers to help you make sense of what's happening in the order flow. This is a chart I was showing you earlier about the imbalances. What if you had software that's going to say, hey, show me the bars that have multiple buying imbalances, well, or selling imbalances. So here you go. You had a swing high, multiple selling imbalances. Just off a swing low, multiple buying imbalances. Doesn't get much easier than that. All right, if that's one thing you can take away that. Now remember, trading is a journey, not a destination. There's always curves in the road, so prepare yourself the best you can. So what you need to get started, never stop learning, learn from a professional, and get the proper software to make market analysis easier. So far you discover how order flow puts you on the path to trading success in a field that many people fail in. You can achieve market understanding through order flow, which allows you to trade with more confidence and conviction, and how to see market activity that's invisible to most traders that you can capitalize on because you have information very, very few traders have access to. So I hope you get this one thing. When you understand what's happening in the market, you put yourself in a position to become a better trader. Order flow gives you an edge by presenting what's happening in the market in an easy to understand format. So how do you make this happen? Well, you got 2 choices. You could do trial and error over a year and come back and listen to another presentation of mine, or you can get results quickly. So what I've got for you is the Orderflows Trader software. Now, this is not for everybody, right? It's not for people that are looking for a red light, green light trading system, or people that think they know everything, or people that don't want to put in any effort, right? What you're going to receive is the Orderflows Trader software, which is the volume footprint chart with 17 pre-programmed order flow indicators. You get started in minutes. It's very easy to use. It works on NinjaTrader 8, and I sell this on my website for $8.99. Now you're going to also get access to weekly live training, right, which I show you real order flow examples, live training on ways to use order flow, and get your questions answered. This is included, right? Normally people charge $200, $300 a month for access to this. Over a course of a year, that's about $2,500. But you're going to get that for free. But I got extra bonuses for you, right? I'm going to give you my order flow trading course, which is valued at $297, right? I sell it for $297 on my website every day. I'm going to also give you access to the Order Flows Inner Circle video series, which is on my website for sale at $497. So the software, $899, the group training, per year is $2,500. The trading courses, $297, $497, that's over $4,000. You're not going to pay that today. But what you're going to do is you go to orderflows.com/off3. There's no monthly payments. It's only $749. Right? That's all you got to do. And as a special bonus, I got a special bonus for InvestorExpos traders. Is you're going to get access to the Order Flow Playbook, which is a course I did, which, learn how to use order flow to trade around market structure, learn how to use order flow to see market strength and weakness, and learn order flow trade setups. I sell this for $297. So with all of that in there, you're going to get all that stuff for just $749. It's a one-time payment. There's no monthly payments, right? I hate that stuff, monthly payments, because sometimes you forget to pay your credit card bill, then it doesn't go through, then it's like, oh, you get headaches, right? Now, I told you earlier, I wrote a book on order flow trading. If you're interested in my book, you just go to orderflows.com/book, and you just enter your name and email, and that will take you to the download page on how to get it after you enter your name and email. Now, I do realize, we're getting short on time, so to get started, what you have to do is, again, just go to orderflowstrader.com/oft3.html. The link is in the chat below. I think Anna's put it in there. So again, thanks everybody for taking the time out of your day. Anna, I'll throw it back to you. So thanks for having me. And let's put the link back up there on the screen. So everyone interested to get started, go to orderflows.com/oft3.html. And I hope to see you guys on the inside. So thanks, Anna. Thanks for having me today. You're welcome.